Hi, welcome to the SOW Summit 2020. And today we have Sheena Kapoor. Sheena is a marketing leader with over 15 years of experience across financial services, media, and real estate. She's currently working with the Edelweiss Group as head corporate marketing. She's spearheading brand and corporate marketing initiatives for the group. She's instrumental in building the sports association for the group as principal sponsor Team India for Olympics and has managed brand ambassadors including the late Irfan Khan, Hima Das, Manika Batra, and Saina Nehwal. She has led award-winning brand campaigns including CWG and Asian Games, SME business loans, amongst many others. She has bagged over 50 marketing awards for various initiatives. She has done a brand management course from ISB and holds an MBA from SIMB. She has represented India at the International Relations Conference at Oxford on a full scholarship and has won multiple awards, including award for innovation by TSC FM and Innovator in Marketing at the International Women Leaders Forum. Welcome, Sheena. It's great having you here.
Thank you. Thank you for having me.
Mehekka Oberoi is currently handling the IAFL Disrupt initiative at IAFL. Mehekka works along with the chairman as part of his strategy team. Mehekka is self-motivated and enthusiastic and has more than 5 years of work experience. Identifying new opportunities to improve the growth prospect of a business is her forte. She's passionate about investing, mentoring, presenting, marketing, writing, and public speaking. She's a gold medalist from the University of Mumbai, is an MBA rank holder, and has bagged awards like BMA's Young Managers Award, top of 15 Infocom Future Leaders, Lights of Podar, and the Principal Special Award for her all-around performance. She has been a mentor for startups for the last 2 years, advising early-stage startups on their business strategies and growth plan. Having brainstormed with a lot of startup founders on the business opportunities that lie ahead, she has come a long way. Thank you, Mehekka, for being here. It is great having...
My pleasure.
It is great having two such passionate, dynamic, and innovative women on this panel today. And we are going to be discussing driving startups in the current financial market. So diving right in. My first question, the two of you, and any of you can start first, would be that one of the biggest driving forces in any business is finance. Is there enough money for every startup in India? Sheena, Mehekka, anyone can go first. So, Mehekka, do you want to start?
Yeah, sure. So I think when it comes to the amount of liquidity which is available, a lot of venture capital funds in PE have sufficient amount of money to pump in when it comes to good startup ideas. But if the question is, is there money for every startup? Probably not, because it a lot depends upon how the entrepreneur is, what's the vision, are you willing to bet on that vision, is there a clear path which is laid down in terms of profitability, the scale that a particular startup can have, that will determine whether the fund will be made available or not. So I would say, rather than saying that it is fund available for everyone, fund is available for startups which where there is a good idea, where there's a good management, and then there can be a scale which can be achieved. There's not going to be a shortage of funds for these kinds of startups.
Got it. So I'm guessing what you mean is the idea and vision, whether the entrepreneur has the idea and vision to take that ahead. And so there's definitely funds in the market for innovative ideas and something that could take or work. Sheena, what about you?
Yeah, I largely agree with Mehekka's point of view. And just to build on that, I believe that not every startup gets funding predominantly all through the years, and we've seen that. COVID has just, kind of just worsened the situation and made it a lot more, challenging for startups to raise funding. But having said that, I think startups and entrepreneurs, it's built into their DNA, to survive against all odds and to be resilient. The amount of funding will obviously depend on a lot of factors, right? Whether it is to do with the business idea itself, the size of the opportunity, what the landscape is and how futuristic it is, what the MVP is. Early stage startups, depends a lot on the traction that they may have gained with the MVP in place, in terms of the target segment that they are addressing, and of course, off late that initially there was this, bandwagon of PE VC monies, being pumped in to really drive growth and acquisitions of customers. But today, startups have to be a lot more cognizant of the classic question of growth versus profitability. Those startups that are going after vanity metrics of just gaining traction and traffic, rather than being rooted in the fundamentals of the business and getting profitability as a metric and building that in terms of an ROI. I think the skew is more towards that. We've seen that with Ubers and WeWorks, right? Multi-billion dollar organizations today, where now it's being asked very serious questions around profitability.
I think
Correct,
that,
exactly.
Sheena, absolutely correct. So, the startups have to think that they have to build a business and not just make a business for selling. So, if you're a lot of these startups today want to make a business just to sell it. So, from a startup's perspective, ideally they should be looking at building long-term sustainable business, which will help, rather than just making and coming up with an idea that I would want to sell this out. So, obviously, when there's opportunity, you might want to sell, but you don't build a idea or build a business from a mentality that you would want to sell it. You would always want to start by saying, I want to build a scalable business. What comes my way is important. So I totally agree with what Sheena was trying to say, that startups have to be very careful, founders, that you build a long-term business. You come into the business when you think it's a long-term business which can be profitable, rather than saying, let me just build a business, get certain valuation, and then just sell it off.
It's not a valuation game anymore. You'd still have that, but yeah, there are questions now about profitability.
So Sheena, I like what you said. You said that a couple of years back, there was a lot of money being pumped in, where a lot of startups were getting money. But now you're saying that has changed. So what has changed? Can you shed a little bit of light on what has changed vis-a-vis a couple of years back when there was a lot of money being pumped into the market?
The metrics itself has changed, right? Today unicorns are seen as the, small change. $1 billion enterprise is seen as small change. The valuations of these, and so what happens is, it's like that internet bubble burst that happened, right? It keeps ballooning, burgeoning, and then there comes a time when the fundamentals don't support that kind of size and the burgeoning size in terms of the valuations. So what happens, therefore, for large VCs, investors who've pumped in, multiple millions and billions of dollars, getting an exit option and an exit strategy and getting, significant returns on that, then becomes paramount but challenging. And therefore, which is why I gave examples of, WeWork or Uber, where, and that has made VCs and Ps therefore shy away from just pumping in money. Today, now they look at a lot more fundamentals in terms of, what is the sustainable model, what is the profitability angle, and it can't just be that, you're just pumping in money to just play a valuation game and just show metrics and what I call vanity metrics, really.
Got it. So if we have between a traditional lending system and new age fintech companies, what has really changed? And what are the advantage for its customers?
Mehekka.
What has actually absolutely changed is the way you are perceiving the entire digital wave and customer being put at the forefront. So, when it was traditional lenders within the lending space, it was more about, you doing a lending business, you're giving someone money, so let that be an elongated process. But with the entire COVID thing, what is changing in the new age, and even for, traditional lenders, so it's like, either you disrupt or you get disrupted, right? So even for traditional lenders, this is one big thing which is changing, wherein you have to adopt to digital medium. You have to get customer first. So your customer journeys in terms of with what ease can you get a customer to avail a loan becomes very, very important. The process, the time, the tag taken. This is something which has, the process has hastened up because of the adoption of digital now. Because of COVID, you see a lot of customers also not wanting to go out of home and undertake any process. Everyone wants it to be at a click of a button, and this is what even fintechs have done. So most of the neo banking startups which have come, what are they doing? They're actually ensuring that there's a ease that the customer has, and from the back end you have a bank who's supporting that. So each of these neo banks and the new age fintech companies which are coming in, they're picking up certain niches in specific customer segment and trying to solve that particular pain point which eases a process for the customer. So that is very, very important. And that's like going to be the next big differentiator on who wins versus who collapses, in terms of how do you ensure that the customer is at the forefront and the technology is at the forefront in terms of getting easy processes, hassle-free things for the customer, because that's where the traction going to
come. Okay. Sheena, what about you? What are your thoughts?
Yeah, so I believe, Mehekka, again, just to build on that, what has changed for startups vis-a-vis traditional companies, and it's not just limited to fintech, for any kind of tech play startups, they have a very digital first strategy and approach. The second big differentiator is they have an outside-in approach, and therefore the entire customer journey is and the product is designed around, yes, there'll be innovation and the underlying technology in place, but the entire emphasis is on making the entire experience for the customer seamless. So whether it is about simplifying the journeys, whether it is about making the entire platform intuitive, whether it is about building algorithms, robo-advisory in terms of using and leveraging data, artificial intelligence, machine learning, building a seamless infrastructure, making the technology agile, leveraging data, right? In terms of to make the services faster, simpler, cheaper, and I would also say closer. As close as where the service or product is available as a wearable device, or it is there at the command and literally on your fingertips, or your voice command, right? So that's the entire play. Even in terms of fintech, right? I think for fintech, obviously, technology transformation, they think technology first and they use technology. Unlike traditional organizations, banking, financial institutions, where digital seems to work in silos. You have legacy systems in terms of technology infrastructure. You don't have the capabilities built in terms of a full stack of technology to be able to cull out data insights and to be able to monitor the customer journey and be able to at every value chain, whether it is the IDA model, right? So from when the customer is researching a product, building awareness, interest, desire, and then finally the action, right? So the entire adoption of the product or service and the entire digital customer journey is mapped beautifully in fintech. So take examples of on the lending side, financing side, or even insurtech. And they have disrupted every aspect of financial services, whether you're talking payments, whether you're talking banking transfers, whether you're talking credit assessments, risk models, compliance, legal, even in terms of the entire reducing the emphasis on intermediaries and reducing the time in terms of doing KYC. Today, you have startups, who have algorithms and technology which is able to, literally in real time, pull out your credit scores, map out your eligibility for a loan, and be able to actually process it with an on-spot loan, like literally, in matter of a few minutes or hours. Which traditional, companies, organizations wouldn't. The traditional approaches, you would go to a bank, you would fill up paperwork, there would be a process, there's a time. So that entire chain has been disrupted, and which is what really, fintech is about. And it is so vast a space, and it is not limiting. It's like every day, even as we speak today, you have newer disruptive technologies at play. Today you're talking about futuristic currencies, of cryptocurrencies, bitcoins. That's the future, right? So in terms of the entire fintech space, I think it's very exciting. I think what they've learned is what not to do rather than what to do from traditional.
Which is the most important, which is actually more important than knowing what to do.
They've learned what not to do. Yeah.
Which is great. So what are your thoughts on the new age disruptive and emerging markets and companies?
Who are you posing this question to?
Both.
Mehekka, we'll take that as a rule. You go first.
So, in terms of what the new age companies are up to, right? So, if you look at what they are, the way the business models are evolving, and the way these new age companies are coming up, mostly, it's like a build up on your earlier question. Also, mostly it's about picking up certain niche areas within the existing chain, and then trying to evolve that. So basically there are, per se, there are no new business models which are coming up. It's actually existing business models being changed in a way that it becomes much more friendly, right? So you kind of pick up an existing business model, you see how it is working, you understand, and then you come out with a solution which is much more simpler. For that example, let's say what Uber was trying to do. So it's not that a taxi services was never available in the past. Earlier, people used to call and book a taxi. But Uber came, disrupted the entire space. They did that everything available on a click of a button. Now, most of these business models which are evolving for the new gen companies also, it's based on your existing business models, but trying to pick up certain niches and make it much more easier for the customer to get hooked to that particular ecosystem, so that it's easier to have that customer stickiness into place. That's exactly what these new age companies are trying to do. So not anything new, but an old one being packed into a new avatar, wrapped with technology, probably is what they're trying to do.
As you said, makes it easier, makes it faster, which makes somebody obviously jump bandwagon to them instead. Sheena, what about you?
I actually here, for a change, have a differing point of view. While Mehekka spoke about, yes, it is essentially the same business model which is getting disrupted with the packaging of technology. I actually think that, whether you call it the age of convergence, because we're all on interconnected devices, whether you talk about, call it the age of turbulence or disruption, there is underlying reality, which is about disrupting new business models completely, right? Yes, of course, technologies, had a predominant play in terms of reinventing and making this possible and enabling this change. But there are new business models which did not exist, earlier on. You talk, right, whether every kind of tech, whether you talk edu-tech, you talk agri-tech, you talk fintech, media tech, insure tech, everything there's tech. Very soon there's going to be a nature tech, a startup that, and they're probably already working, in terms of on the climate change, right? So there are problems which are, yes, fundamentally every startup is trying to, cater to an existing problem or a need gap which exists in the market. But there are very disruptive models of technology. Blockchain itself has, created completely new business models. You probably be talking about, futuristic, and there are companies and startups which are working on probably even stealth mode, on working on completely futuristic platforms, technologies, innovations that have not seen light of the day, but they are gearing up for it for 2030, to cater to demand, then. Look at the way we consume, whether it is content or entertainment, or the way you travel, the way you eat, the way you get your healthcare checked, the way everything is completely disruptive, and there are completely new models of businesses that have evolved, and interfaces of customer experience and platforms which did not exist hitherto. And I think it is about on-demand solutions. It is driven by hyper-personalization. It is driven by the world's becoming smaller, and getting more and more inwards in terms of personalization, customization, in terms of the technology, and therefore the ecosystem of startups actually trying to unearth every layer, like an onion, like every layer of the consumer segments. You have data which is going down to, just give you an analogy, it's like how you have a nucleus and an atom, and neutrons and electrons and protons. Here you're getting into, there's a user, but you've gotten down to the data of marital history, criminal history,
everything, likes, dislikes,
your interest level. So that kind of micro data, which is which a lot of, and most of your social media platforms are leveraging that. Like they say, if you are getting a product or a service for free, then you are the product.
You are the product, correct. That's really true. That's so true. Correct. So if we go, if we move on to funding, I want you to shed light on what kind of avenues are available for startups when it comes to funding at the early stage. Mehekka, as you're setting the precedence of you going first.
So I think when it comes to the funding availability that is there, you certainly have you kind of get an angel investor, do a seed round. Angels, obviously, a lot of startups at an ideation stage get some kind of an angel funding, and angel fundings are becoming a lot popular. So you have an angel and a VC who would come in for an early stage startup to kind of invest in, a lot being driven by angel investments to start with, because there needs to be some kind of a backing that you need to have. A newer thing which kind of emerges is if you were a startup at an early stage, but you prototyped your product, you've tested your product, you could probably also reach out to a strategic investor, because we're moving to a wave where it's more about a collaboration rather than everyone trying to do it independently. We're moving to a ecosystem where there's going to be more collaboration between larger organizations and these startups to solve certain problems. This collaborative approach also ensures that if you have a solution wherein you could go to a strategic investor who's looking to adopt it, you could get a funding as well as an access to business, which has also emerged as a form of ensuring that you get some amount of growth capital and scale up your business. While angels and VCs have always been around for long, but I think this collaborative approach, which companies have, started to follow, is definitely to be looked at, and a lot of startups are actually wanting to have a collaboration with an entity wherein they could get access to funding, and at the same time get a stage wherein you could scale up your idea to a certain level, because you get access to the market, you get access to the customer, you get to test your product at a different level, which can then help you scale your organization.
Got it. Sheena, what about you?
There are multiple avenues available, right, for startups. it is an uphill task. It's typically a very lone solo warrior kind of a journey that most startups start off with. Initially, of course, you're bootstrapped. I mean, my own husband was, bitten by the entrepreneurial bug, and when he decided to leave his corporate job and a high-paying job, and I was there to support him. But it was important for him to do this, and we were bootstrapped, right? So your first port of call is your own, dipping into your own savings, asking family, friends, building a corpus, and then to be able to pilot, create a proof of concept or a prototype or what is known as the minimum viable product or an MVP, to see whether it has legs and traction, and so that you're constantly tinkering with it to make it a lot more. The product and the service also evolves, right? Basis the customer journey and experience and expectations and all of that. But for early investors, there is crowdfunding platforms also available. Also, while I think to most laymen or professionals, who are employed with like corporate sectors on salary jobs or whatever, this whole startup funding bit with the large monies, right? They're becoming overnight millionaires in 2 years. You're talking like overnight $300 million, $500 million worth. The founders have, but it's not easy. So a lot of founding members, therefore, think about whether they want to use the debt route vis-a-vis taking the equity financing route, because there are pros and cons on both sides. A lot of them may not want to dilute their stake. So there's that decision also, which rests on the founding members in terms of, whether they want to pick up and investor money, or whether they would like to, just lean in on loans or the debt route, and have the controlling stake of equity and have a lot more a say in running your own business the way you want to, right? I mean, Steve Jobs was a founding member, and it reached a point where the board ousted him, right? So you also know of stories where there is the flip side of pressure, and that may come in from VCs or PEs in terms of showing, because there's just so much at stake. So I think it's really about, and what decision, the founding members, really the startup to take.
I would actually, disagree a little out here where it comes to actually the debt funding part of it, because I have generally seen that a lot of startups struggle to raise debt at an early stage. Now that's essentially because of the way lending institutions are, designed, or their policies are designed. I've seen a lot of startups struggling to actually raise any kind of a debt funding in the very initial stages of their product, because you don't have anything to back your idea at that very particular moment. And even, if you're a product company, I have seen some startups struggling to even get debt to buy inventory, because your track record is not probably that strong to raise significant amount of debt to get to a scale. So that's only the challenge. While I totally agree that there's a lot of pressure when it comes to an equity investor coming on board. You always want to have that equity, but that's the trade-off, which is always going to remain from
debt is, yes, it may not be easy, but if that were true, Mehekka, you wouldn't have entire industry running on financial services of banks, cooperative, PSU, private banks, and NBFCs, right, which are lending out business loans. There are a lot of, in fact, you have startups which are catering to SME financing as well. So, so when you're starting off, as an SME also, you're talking about being in an early stage in terms of your business models. But yes, there are a lot of incubator accelerator programs. I think that may be a great bet, because you get not just access to finance or capital, but you get access to knowledge, learnings, benchmarks, the ecosystem of partners, vendors, customers, or technology partners. So there is that entire ecosystem that and the incubator maybe, or the accelerator may be able to help you work with it. I also think classic speak, if you have the luxury, try and pick up smart money, because it just helps you therefore in the longer run of getting exits and getting higher future financing options. It just opens up a lot of avenues later on.
Correct. Sheena, now you have worked, in a startup. I just wanted to ask you that what were some of your challenges that you faced?
Yeah, so I think I was fortunate to have worked earlier on in my career with two startups actually. One was the financial services business of Times of India Group, called Times of Money, where the flagship brand was Remit to India. We were the world's #1 online money transfer portal and India's first online remittance solution. Right, we were a startup. Also thereafter, I actually started as part of the early member team, your journey of 0 to 1, as they speak, as part of Artha Property, which was also an investee company of the Times of India Group. You know, so for me, it was a very exciting phase. The most exciting phase of my career looking back, because you have sweat equity, and it's the closest that I've been to becoming an entrepreneur myself. But the sense of ownership, the sense of drive, the energy, the passion, it is infectious. It is, there's just this buzz of energy, and it's electrifying, and it's running through the team, and everyone's feeding off each other's energy and the pace of work. And, there is this opportunity to be able to create like a new canvas and a landscape, but it's extremely challenging, because I remember I actually, because we're taking a new office space, we were just 6 of us who were starting. I actually fixed an aquaguard in the pantry. There was one washroom, and I was at that point the only lady member team, and I said, sorry, we have to figure out a different washroom. But in terms of scaling, in terms of building the product, in terms of testing, and I'm talking 2008 when the whole Lehman Brothers collapse happened. So we had to pivot. Because by then we had really burnt our monies and scaled, and our growth trajectory was vertical. It was very steep. We grew from 6 people to 600 people, from one office to 35 branches. And you've done multiple hats, right? As a startup, you've done hiring, you've done product, you've done alliances, you've done admin, you've done marketing, of course, you've done alliances. So challenges to keep yourself motivated, to be able to pivot, especially when you have environment, exigencies, which force you to really reinvent yourself. And you don't have, the luxury of, processes, infrastructure, a large team of admin and HR, or finance supporting you. It's a very lean, mean team, which means that each one really needs to do the grunt work themselves, and you have to be able to roll up your sleeves and really say, okay, I'm ready to do this. And long, exhaustive hours. It is demanding in terms of your energy, physically, mentally, emotionally, but it is so worth it.
I can imagine. And Mehekka, you've been consulting startups since the last 2 years. What has your journey been like?
So it's been absolutely amazing journey, because when it comes to interacting with some of the founders, and understand what they are exactly trying to build, understand some of the struggles that you have at times, mentoring them through from an ideation phase to saying, okay, this is what my idea is, but how do you evolve this idea into finally a product or a model which can be a scalable model. So I've seen a few startups where we started interacting when it was just an ideation phase, and then um, finalizing what essentially your business plans should actually be, or what that business model should be. That's been an exciting conversation. So it was something that I always did as a as something I used to do over weekends, but it kept me on a thinking mode always. How can you solve a certain problem, how can you have an idea to get into a conceptualization stage, and then obviously see the struggle in terms of reaching out to investors when it comes to your very first round of that, making that pitch deck presentation, that how do we present this finally to a fund to get that first check that you want your business to scale up. So that's been a roller coaster journey. Obviously, because you kind of talk to these founders, and you've been mentoring them or talking to them day in day out. It so becomes that you kind of get motivated. You kind of get attached to the way the journey is folding up for an entrepreneur. Disappointments at times, because when it doesn't go through, how do you change, or what should be your plan B working on those. So yeah, it's been an exciting journey, and I think I'm glad that now I'm in a role where I'm doing this, where I am interacting with startups to see how it could be a collaborative mode for us as an organization. So I think it's a wonderful journey right now, when there's a mix of what you liked to do as an hobby, and today you're doing it as a profession. So I think it's been a good journey.
That sounds super interesting. And obviously, I don't think we can close off the session without talking about COVID and talking about the pandemic and how it has affected businesses. So what would your advice be to startups and SMEs in the current financial market? It's tough, but what is your advice, or what would you like to tell them? Mehekka,
So
you want to go
I
first?
would want Sheena to go first on this one.
Oh, Sheena, we're changing things up right before we end. So
Right.
if you had to say something, what would you?
So, I would say that, that have resilience, keep the faith. This too shall pass. This is a very turbulent, unprecedented time, and there are very unique challenges. But one is, because I think in a lot of startups and entrepreneurs, there is, like I said, it's engineered into the DNA to stay resilient and fight against odds. I've seen that with as a common trait across all entrepreneurs and across all stages of their journeys. So keep that firepower alive. I think it's also about using this time to forge relationships, reach out to organizations, because organizations are also being compelled to transform themselves and to come up the accelerated curve on the digitization of their products and services, and the landscape. This is the time that you can actually partner with these same companies, right? And use this opportunity and platform to say that, hey, here is a proof of concept, here is a product that we can pilot and test. A lot of organizations have started today running their own incubation programs and accelerator programs, where they actually want to reach out to startups or fintech companies. If you're in the edutech space, for instance, so it's you have schools, colleges, universities now who will start having to lean on and being compelled to reach out to these startups, because they don't have the frameworks and the know-how and the knowledge to provide and bridge that gap. So I think therein lies the opportunity, so to be able to really look at a value proposition, don't stay wedded to your product, look at the value proposition that you want to provide to the organizations that you can partner with. Don't get seduced by too high, valuations of unicorns. Stay rooted and grounded. For every unicorn and success story out there, there are, thousands of them that didn't make it. So keep the fundamentals right. Focus on the value proposition and stay resilient.
Got it. Mehekka?
So, Sheena has covered most of the things, but yeah, so one thing that, it's very important for startups to understand is change is the only thing which is constant. So it is going to be very important that, they also adopt to the changing times. So the faster you are able to adopt to the change, the better it is. So you, obviously you have to be confident, you need to be passionate about your idea, but at the same time relook when it is needed. So when it's needed the most, that you want to reevaluate your business model in the way things have changed. Would this business model still be the same, or would I have to do something to take it to the next level? That's something you need to keep questioning yourself, because what happens is at times a lot of us get emotionally attached to the very start idea that we started out with, that we don't want to change. We think this is something that can grow big. And even now, when the times have changed, you don't want to change that mindset of seeing how you could tweak and make certain small changes so that it becomes the next big thing that you would want to do. So you don't want to pursue, but that's very important at this juncture. You reevaluate things. Are you on the same page? Because I think change is the only thing which is constant. I think a lot of traditional businesses are also evolving, adapting to the way the new things are going to work. So it's going to be very important for the startups to look at their business models and say, okay, that's something, be passionate, pursue. You should never so try till you succeed. So you have to be there in the game, stick your neck out and say, okay, I will make this happen. But at the same time, also don't get so much attached that you do not look at an aspect which might have changed in your model and it needs a tweak in your strategy. I think that is something that you really need to be open towards. And as Sheena was highlighting, reach out to corporates to test your idea. A lot of corporates, as she's rightly highlighting, have opened up in terms of wanting to collaborate more with startups. And at IFL we're also doing that. We're running an entire initiative where we're wanting startups and wanting to collaborate with certain new startups where you have some kind of a disruptive way of doing things. We're more than happy to collaborate, and there are a lot more organizations across the globe running cohorts wanting to test out newer ideas as these startups are coming from. So reaching out to organizations is also very, very important, who are running these kind of programs to help you scale and test your product in terms of scalability.
If we have time, I just wanted to add, and I'm giving an example, a case study, from one of our own SME clients, and he's a small trader. And during this COVID time, yes, it's an unprecedented crisis, right? But I think every crisis also presents like a latent opportunity. So when the lockdown was announced, he was obviously impacted, like most businessmen out there, and which is true for startups as well. But he pivoted. He saw an opportunity in the crisis, and he quickly changed gears and got into manufacturing of masks and sanitizers. And literally, like, he pivoted like this, and we got talking to him, and we invited him for one of our fireside chats internally, and we heard his story, and it was just brilliant, because here was a startup that saw an opportunity, or a business who saw an opportunity in a crisis, decided to change gears, pivot a business model, and is today extremely successful at that. So that's about being able to and open to reinventing yourself and changing gears and pivoting and seeing opportunities in a crisis.
Perfect. Thank you so much, Sheena and Mehekka. I think this has been so informative, especially for people, entrepreneurs, startups tuning in. I think I'm sure they've definitely learned a lot. So thank you. And it's been great having you both here. This was a fabulous panel and session. Thank you and goodbye.
Thank you. Thank you.
Thank you.